Well, wouldn't you know it, we're back to discuss the new Trump administration, this time focusing on real estate investing. With the Republicans controlling the House, Senate, and White House, albeit by a razor-thin margin, there's a lot of buzz about what's to come from the new real estate market. And with what is already the wealthiest cabinet in U.S. history outpacing Trump's last cabinet by a country mile, full of business industrialists, or what some would call barons, it's clear this administration is gearing up to prioritize big business. But what does this mean for us in California, where the real estate market is already a little bit of a roller coaster? And how might these policies impact investors nationwide? Let's break it all down. Be sure to like, subscribe, and share this video with anyone who's watching the real estate market very closely, and let's dive in. Let's start with California, a state that's always doing its own thing when it comes to real estate. The Trump administration's proposed policies could have ripple effects here, but California's unique challenges means we'll feel those impacts a little bit differently than everyone else. One big concern is interest rates. If Trump's administration pushes for large infrastructure spending, maybe some tariffs and some tax cuts, it could spur economic growth, but also drive up inflation, leading the Federal Reserve to raise interest rates. For Californians, where home prices are already sky high, this would mean mortgages become even less affordable, putting home ownership out of reach for many first-time buyers. Federal deregulation might make it easier to build in some states, but what about California? We've got environmental laws, zoning restrictions, and local ordinances that make development a slow and expensive process. Add to that potential labor shortages if stricter immigration policies are enacted, and you're looking at higher construction costs and even fewer new housing build projects. It's the perfect recipe for worsening our already dire housing supply issues. On a side note, just build more housing. It doesn't have to be a big issue. Just build more and people will fill it anyway. And then we have changes to deductions like the mortgage interest deduction or property taxes, which could hit Californians especially hard. Many of us carry higher mortgages and property tax burdens, so limiting these deductions might discourage buyers or even depress home sale values in higher taxed areas. We'll see if the state and local tax or SALT deduction cap is kept or done away with. Capping this deduction federally means those of us in states with higher local taxes, most of which predominantly vote blue, have less to deduct and thus lower our federal tax burden. But let's shift nationally. On a national scale, there are some trends we can expect under a Trump administration, many of which will be shaped by the wealthy business-oriented cabinet. If federal spending ramps up, we can see inflation rise and interest rates follow suit. Higher interest rates typically mean higher borrowing costs for buyers and slower home sales. On the flip side, investors with cash on hand might find more opportunities as competition in the market cools. Trump's tax policies, like reducing corporate and personal income tax rates, could leave people with more disposable income, potentially boosting demand for housing. But if the administration tinkers with the mortgage interest deduction or property tax benefits, it could make home ownership a little bit less attractive, especially in expensive markets like California. Rolling back environmental regulations might lower costs for developers in some parts of the country, encouraging more housing starts. However, long-term sustainability risks and potential backlash from environmentally conscious buyers could offset some of these benefits. Now, for those of you already investing or thinking about diving in, there's reason to be optimistic. Trump's policies historically favor real estate investors, especially those who already have a significant resources to draw from, of course. So let's discuss why. First is preserving the 1031 like-kind exchange. Republicans are likely to maintain this long-standing tool, allowing investors to defer capital gains taxes when reinvesting in similar properties. This is a massive advantage for those looking to grow their portfolios and something I've discussed in detail before, so I'll link to that video if you want a deeper dive there. Just keep in mind, this is real estate investing only. Little sweetheart deal for the real estate investors out there. Next is capital gains taxes. Expect capital gains tax rates to remain low under Trump, which is good news for anyone cashing out on appreciating properties or even securities investing, like stocks, bonds, and mutual funds for that matter. And third is market confidence. Economic growth policies could boost confidence and drive more real estate investment. However, uncertainty during policy transitions could slow transactions in the short term, though. Look, it's hard to ignore that many of these policies are designed to benefit those who already have significant resources. Lower taxes and easier regulations are great if you've got capital to invest, but for small-time investors or first-time buyers, rising interest rates and affordability issues might make it harder to compete. In California, where high entry costs already lock out many aspiring investors, these policies might widen the gap between those who can and can't capitalize on the real estate market, the small folk. The incoming Trump administration promises a lot of change for real estate, with policies that could reshape markets both in California as well as nationwide. But as always, the devil is in the details. How these policies play out, especially in a Congress divided by razor-thin margins, remains to be seen. If you're an investor, now's the time to stay informed and proactive. Keep an eye on interest rates, tax reforms, and market trends. If you're in California, brace yourself for the usual challenges: high costs, tight supply, and a unique regulatory environment that won't be disappearing anytime soon. Seriously, just build more housing. Could be any kind of housing. You just need more supply to meet the high demand. Anyway, what are your thoughts? Are you optimistic about what a Trump administration could mean for real estate, or are you bracing for more challenges? Drop your thoughts in the comments below. And as always, thank you for watching. Don't forget to like, subscribe, share the video with anyone interested in real estate investing. I've got a lot of videos on protecting your empire, and in the new year, we're going to start talking a lot more about taxes and how to save you money. I'm attorney Andrew Bethel, and I'll see you at our next meeting.